Hey guys, it's Schmitcoin here with another video update for Bitcoin Magazine's Bitcoin analysis. We'll be looking at the weekly time frame first, the daily, then the 4-hour, and then we'll actually zoom out to the monthly time frame because the monthly candle does close in a couple of days. So there are some levels that we need to consider when we look at the market structure. Just forewarning, this video will be slightly longer than normal because we do have to consider both the bullish and bearish cases. And I think they're both equally worth considering. So at the moment, we're situated right in this no man's land between two weekly levels. We do see decreasing volume and we do see compressed spread, but that doesn't mean that we have to reverse here. It does mean that we're starting to see weakening demand and the presence of supply. So typically, when we see compressed candles, that means that demand is either lacking or there's an imbalance, and the supply is starting to pick up, which makes sense. The higher we go, the more sellers become interested, and the more likely people are to take profit from their longs. And as I've discussed in several of my other videos, reversals typically tend to happen where there is both a combined selling pressure from the bulls taking profit from the run, and then also speculative shorts from the bears. So as these bulls that rode along, as we enter into these horizontals outlined here, we will start to see some profit taking take place, and possibly even some shorts picking up, which will give us a nice combined selling pressure. When we look at the daily time frame, we see that the supply is actually pretty low at the moment. When we look at our last consolidation, we see very high volume on the sell side. We do see high volume on the buy side as well, but when we look at this current breakout, the volume's not the most impressive in the world, but it's equally unimpressive from the sell side. The candles are actually looking a little bullish right now. Whenever we see compressed bodies of candles with long wicks, that's often an indication that supply is being absorbed, meaning that people are still bullish. Maybe they're not outwardly looking to push the market up, but the selling pressure is at minimum being absorbed, and we can see that with these long wicks on the daily candles here. The total volume is pretty low, but like I said, we're on the weekly time frame. We're kind of in this no man's land, so it seems very likely that we're going to drift up to the next level. Whether we retest this weekly level at 8,200 to 8,100 or not remains to be seen. So far, the selling pressure hasn't been terribly interested in bringing the market to that level. When we look at the low time frame 4-hour candles, we do see a little bit of horizontal market structure shaping up. We see this nice support turn resistance at 8,700. It's currently resisting it, but if we reclaim this level, we can fully expect us to continue upward. When we look at the daily time frame, follow this purple line with me here, we did start to see some supply show up because we're at our local top, but there were several times throughout our market structure where the market took interest at this level. So it makes sense that we did see some profit taking there, maybe some speculative shorts picking up. But when we look at our monthly time frame, which becomes a little bit more relevant as we come to our monthly close in a couple of days, we see that, again, we're in this no man's land here. There's not a whole lot of space above, and there's not a whole lot of space below. So we're kind of floating around between two horizontals, and it does seem likely that we're going to visit this high before any sort of selling pressure takes place. A typical retracement could be anywhere between 23 to 50% of the move, this being the bottom, this being the top. So a retracement could be violent, but here are going to be your points of buying that should be of interest to you, right here at the $6,400 level, which is this guy right here, and right here at the $7,700 level. Both horizontals are very strong, and considering we blew right through it, I wouldn't be surprised to visit this level or even visit this level in the future. If we fail to hold support on this weekly time frame, those are going to be the levels that we're looking for. These black horizontals here. But if we maintain our bullish market structure, we continue upward, we can fully expect to see a test of this zone right in here. The black level is the monthly level, and the red level is the weekly level. And as we get into that zone, I would not be surprised to see a parabolic blow off. This little market structure has been parabolic. It's getting more and more aggressive. The consolidations are becoming briefer and briefer. So I wouldn't be surprised to see us blow through this level and retrace like this. This isn't the point in the market structure where you want to be assuming risk. You don't really want to be building a position here. This is the point in the market structure where one would want to de-risk and start to take profit on their longs. The higher you go, the more risk you're assuming. This thing is going to retrace at some point. You just don't know where. And I would hate to be the guy that buys the top. So if you're currently not in the market and you're looking to get long, there are several zones of interest. One major zone here and one major zone here. If we do retrace, I don't expect this to hold long term. I expect it to go through there, and this will be a very strong zone of support. So there will be a nice buying opportunity, I suspect, in the event of a retracement. That's all I got for you guys. Again, I want to reiterate the fact that we're in this no man's land again. Keep an eye out for this weekly level to hold if we do retrace back there. And if we do hold, you can expect this zone to get retested. But if this zone doesn't hold support, well, it's very likely we're going to come down and visit the 6600s. I'll update you guys later on in the week. The monthly candle closes on Friday, so it'll make for an interesting bit of analysis as we look at our monthly time frame. But market structure is bullish. It's very macro bullish. Just sometimes the market needs to cool off. You don't know when it's going to happen. You can try to speculate when it's going to happen, but it does seem likely that this $9,200 level is going to be quite formidable for the bulls.